And looking at the last several quarters' behavior in Apple, especially around the time of its earnings release, we've detected that there's a pretty characteristic pattern where most of the gains that Apple sees are during the second month of every calendar quarter, and that's the month right after it announces its earnings. So we're now right at that inflection point where Apple starts to see the typical gains for the quarter all in the next month. And so far, it's following that pattern. We first started following this last quarter in Q3, and we even synthesized a quarterly pattern, which I sent you a chart of. And Q3 followed the dance steps in that pattern almost exactly. And so now we're looking into Q4. We've had a little softness in the first month, which is typically flat. And we're right at the earnings report, and unless Apple does something wildly different than what it's been doing, we should see a positive reaction and a positive share price for the next month or so.
And I think, Tom, the only thing people might find confusing about the chart is that you got to remember Apple is on a fiscal quarterly system. So this is the end of their fiscal fourth quarter. That's why the second calendar quarter, I assume, is the better quarter, because that's where the earnings actually appear. They're not on a calendar quarter system.
Well, the second month of each calendar quarter is when it happens. So yes, you do have to be really specific and specify which kind of quarter you're talking about. So that's why I'm wanting to say I'm looking at it on a calendar quarter basis, and I'm seeing that most of Apple's gains that it makes at any time happen in the second month of every calendar quarter. November is the second month of the current calendar quarter, and that's when I'm expecting the next upward surge in Apple's share price.
Tom, this earnings season has been funky in the way that stocks have reacted to what largely has been better earnings. Have you noticed any sort of patterns, or what makes the market reward a certain stock? Allergan had a beat and raise. The stock tanked that day. I mean, I'm just trying to think of specific examples. Meantime, Facebook came in light on some metrics and the stock boomed. Is it the setup? I mean, what exactly is it that investors are reacting to?
You're on to a great point. Amazon and Google both got hurt even though they had great earnings. Facebook, not because of anything that the company did, but Facebook marked a turning point in terms of the way that investors and the market react to what the news is. It's not so much about what the actual news is, it's about the way that people are ready to hear that news and react to it. Facebook did just like Amazon did. It reported better earnings but weaker than expected revenue. But it got a positive reaction because we're now at that point in seasonality where people are ready to have a good reaction. People are ready to look forward. They're ready to look past the midterm elections into the fourth quarter, into the third year of a presidential term when stocks generally do well. They weren't at that point in early October when those other companies were reporting. But now Facebook is the tell, is saying that people are now ready to have a positive reaction to good news. I'm expecting that same positive reaction mode to work in Apple's favor later today.
Tom McClellan, always excellent. The McClellan Market Report newsletter. Tom, appreciate it. Thank you very much. See you soon.